Welcome to today's market report. European shares rose on Tuesday as the approval of a US stimulus package helped allay worries of a further dent to the global economy from a new coronavirus strain in the UK. The pan-European STOXX 600 index rose 1%, recovering from a more than 2% slide in the previous session, which was also its biggest one-day drop in nearly 2 months. The US Congress on Monday approved an $892 billion fiscal stimulus following days of furious negotiation. President Donald Trump is expected to sign it into law, keeping hopes of an economic recovery alive. Strict lockdowns went into effect in Britain on Monday to curb the spread of the new coronavirus strain, said to be up to 70% more transmissible than the original, triggering border bans and travel restrictions from several countries. The BBC reported that Britain and France would announce a deal to restart freight by Wednesday. Record growth in UK GDP, however, saw London's blue chip index reverse early losses to trade 0.3% higher, held back only by materials and energy stocks, which tracked declining prices of underlying commodities. Banks led the rebound in Europe, followed by retailers and tech stocks. US stocks cut losses overnight on stimulus news, and while Dow Jones futures traded flat, S&P and Nasdaq pointed to a higher open, signaling European shares could hold on to their gains on cautiously upbeat sentiment. AstraZeneca lost 1.4% after its experimental asthma drug developed with US partner Amgen failed to meet the main goal of a late-stage trial. Oil prices dropped nearly 2% on Tuesday, adding to steep losses from the previous session as a new strain of the novel coronavirus in the UK triggered concerns over fuel demand recovery. Crude futures were down 1.7% to $50.03 per barrel. Brent fell 1.9% to $47.05 per barrel. Both benchmark contracts slid near 3% on Monday, partly erasing recent strong gains on the back of the rollout of COVID-19 vaccines, seen as key to easing mobility restrictions. Gold futures was down 0.27%, trading at $1,877.70 per ounce. On the FX front, GBP/USD has recovered from the oil base as markets calm about the virus strain. Hopes for a Brexit breakthrough also keep the pound afloat. UK Prime Minister Boris Johnson may now allow for a rally by making a concession to Brussels. The PM reportedly tabled an offer that reduced the catch that the bloc's boats fish to 35% from 60% originally demanded. Brussels still wants 25%, but even without getting into the details of the minuscule industry nearly halving a demand, overall, there is a significant room for optimism on Brexit front. The panic about the situation out of control has led to bans on flights to and from the UK and a partial French closure of the border, causing lengthy traffic jams. On this front, Johnson's approach has been calm, promising to work with his French counterparts to resolve the issue. All in all, the panic early on Monday is turning into calm with the potential for rises. Some resistance awaits at 135.40, a high point last week, followed by 135. Monday's swing high. It is followed by 135.35, another temporary peak. Support awaits at the daily low of 133.80, followed by 133.25, which is where the 200-day SMA hits the price for GBP/USD. The pair failed to capitalize on previous day's solid bounce of over 300 pips from sub-132 level and witnessed some selling during the early part of the trading action. The intraday downtick was sponsored by resurgent US dollar demand, though lacked any strong follow-through selling. According to Credit Suisse, Eurodollar maintains the threat of a lengthier correction, while below 122.59. A roller coaster session for Eurodollar on Monday, as early weakness was contained at price support at 121.26 for an impressive intraday recovery, but with subsequent strength then capped at the top of the price gap from the open yesterday morning at 122.59. The German Health Institute RKI said on Tuesday that they are not aware of the new variant of the coronavirus in Germany at present. The seemingly positive news failed to support Eurodollar, which extended its drops towards 122.00. The US dollar was up a little, but jitters over a new COVID-19 strain left the greenback trading well below the peaks seen during a roller coaster session overnight, currently trading at 90.132. This is today's market news. Thanks for listening. We'll see you next time.